Hi, guys.
No.
Hi, everybody. Happy
Hi.
Friday. It's
10 a.m.?
I know technically it's not spring, but it's certainly spring here in Charleston, so it feels like it at
Yeah.
least. So here we go. What do the first couple months of the year look like for everybody? So here's market monitor. So might as well start with our normal pattern. So here we are, median price, and I know this is going to be a big topic of conversation here the next few months, so might as well start with this one. So year over year, plus 2.8%. So compared to February of last year, if we go back, we were at 375, we're at 385 and change. So still a positive number, but you can certainly see that drift downward since last spring. So here's the big question, and John, we should bet on this. So, all right, we're at 385 last March. What's everybody think? Are we above or below this number next month? So here's going to be the big question. 385, because you can see this drift downward. So, because just keep in mind, to go negative, we just have to look at a year ago if we're at 385. Now, I'm pretty confident that April we're going to show a negative number because I don't believe we will be at 400,000.
I think we'll be flat. I think it'll be at 385, and then
Yeah.
it'll dwindle down again.
I think this number next, I'm in agreement with you, John. I think next month this number could be close to zero.
Yeah.
But I think once you get to April, I'm not convinced the market is going to. The market's stronger, but I'm not convinced we're going up 15,000 in median price in 1 month.
No.
And then we're certainly not going to meet May, which was 425, or probably June, which was 420. So
I think the media is going to blow up those months.
So I think next month could be flat. And again, the Charleston market is going to reflect somewhat some nationwide numbers. So, the national media is going to pick up on this. So we got April, May, and June, especially that, once you hit, and remember, there's a time lag. So this April will reflect in May, this will be June, and this will be July. So those 3 months, the national media is going to say, because if we look at 425, if we make it back to 400, they're going to say, look, the market's down 5% year over year. So we are going to flip negative at some point. Now, the big variable is interest rates, and, our as we're going to look forward, our demand is there and our supply is not. So I feel like we are forming a bottom on prices, but, we're going to go negative here. The other question is, are we going to flip back to positive? When are we going to flip back to positive? Is it going to be in the fall? Are we going to get above 395 in August? No, maybe. I wouldn't say no. So we've got this moment in time where we're going to have to fight these conversations of, the media flipping negative. And then I think at some point we're going to turn positive. If you ask me February 2024, are we above or below 385? My bet right now would be above. I'm going to put a little asterisk, depends on what interest rates do, but if we're below, I don't think it's going to be by much. So I think we're kind of finding a base at some point. I think this is a reflection of maybe some people overpaid in May and June. So you can look
There
at
were 900 homes for sale back then. So
right, there were 900 homes for sale, because keep in mind, March of last year, there were 900 homes for sale. When were those closings? They were in May, right?
Yeah.
For the most part.
That's what I mean. Like all those homes were written and then they had to overpay because of the ferocity.
We went from 360 in January to 425 in May. So let's do some quick math here. 360. So it went up 18% in 5 months.
And that's because of the overbidding, right? It was ridiculous. People are putting 100 grand over asking price. So that totally just drove the number up, and you don't see that. You see multiple offers, but you don't see the overbidding.
So 18% in 5 months. Now, the normal market, if we go back prior to COVID, the normal Charleston market, it can go up, in the first, from the low to the high of the season, it can go up 10%. But if you go back in time, look at this time period here to here, right? Does anything else look like that? No. This was a steady growth in here, but this jump reflects people just putting any number on contracts, right? And we're kind of getting back to maybe a line that should have not gone this high this quickly. So, we are, working our way back to getting to a normal market on a seasonal basis. So, just be prepared the next few months, we're just going to have to fight that perception that the market's going down. It's like, well, I think it's already kind of corrected itself and we're going to form a base and go back up from here. So just watch those conversations. What's interesting is price per square foot really has kind of, it went up last month. It's kind of moving sideways for the most part.
Right.
It's, go to last May, it's 217, we're at 212. It's like, okay, that's a little bit, 2% decline, from the peak, but that's not much. So, we're still up 5.5%, but you can see the difference from this growth rate here to this flat, right? So, you can see that change as well.
Do you think the low inventory is keeping that up?
I think the low inventory is keeping it up. I think people renovating houses, is keeping it up. Here's the average. So you can see the average is sliding a little bit. It's down year over year, but the median.
Do you think that people are buying smaller homes because of affordability?
Yeah, that's another good point. And another thing is that, people who renovated homes, they're changing their price per square foot. Maybe it was 150 before they renovated and all of a sudden it's 200. So it's not just a house going up in value, normal appreciation, it's the renovation work that was done on it. So all of those factors might be keeping this more constant. Here's the percentage of original price. So now it's interesting, we were at 100% median from February of 2021 all the way to August of 2022. And then we pretty much fell off that cliff down to 96.5 in January. But look at what happened in February. So, we didn't continue down this path, we jumped back up. So my read on this, and again, these are February closings. So a lot of these contracts were probably written towards the end of the year or beginning of January. But I think this jump is a reflection of the new people hitting the market, the new sellers hitting the market, pricing more accurately, right? They're not overshooting. They're looking at comps again. They're not overshooting. So we'll watch the next couple months, but it's very interesting how we were falling so quickly and then rebounded a decent amount in February. And I think that's a reflection of the new product hitting the market. And all these new listings that are going to hit, watch March is always the highest listing month. So we have to watch what happens there. Those sellers are probably pricing more accurately. So you could see this rebound, and it's not going to go back to 100%, but you could see this rebound more to the norm. So here's, 2015, 16, 17, 18, 19. You can see the seasonality even within this, right? You can see the seasonality, but in that 98% range, so 97 to 99, let's call it, that's kind of the range we operate in. So a couple percent discount, we overshot high and again, for a long period of time, and then we corrected very quickly. And this again is a reflection of, builders dropping their prices, sellers thinking it was always spring of 2022.
Look at it.
So we'll have to watch what happens right in here to see kind of where, and again, there's going to be some seasonality here. If you go back to normal years, there is a seasonality effect to this number. So where do we peak out? 98.5? I don't know, but we're going to come, in my opinion, we're coming up. We're not going to get back to 100, but this is kind of solidifying a little bit because people are pricing their houses more accurately. Here's the average. So you can see the same thing. That average was 101.2. Remember when people paid $425 for their houses? It was 101.2. And then we just fell off the cliff and we went down to 95. A little tick up, so we'll have to watch the average as well, and see what, but on the average, we're 96, 97%, so we fell below it, but not too far below it. So watch, again, these next couple months are going to tell us a lot about where the market is. Days on market. So here we go. So median days on the market, 26. So half the houses are selling, let's just be easy, half the houses are selling in a month or less, and half are taking longer than a month. So yes, you're still seeing houses sell the first weekend, the first day, but this trend is higher. But also look at this, there's a reverse seasonality here, right? So high in the winter months, low in the summer months, high in the winter months, low in the summer months. And this trend is a market trend. So the long-term trend is a market trend. We reach this kind of relative equilibrium in this period of time, right? So in the craziest moment, it was 16 days. And when it slowed down, it was 30 days. So you're about 2 weeks to a month, right? So in the summer, you can sell in 2 weeks. In the winter, it might take you a month. And when we got in here, we were at 3. So everything was selling basically the first day somebody was in there making offers on the house. Now we've jumped up to 26, but 26, when we look back in time, look at February of 17, we were at 31, right? So 31, 26, that's not that abnormal, right? The question is that where does this really peak out? And if you look at the peaks, so every stat is different. Look at the peak months, February, and forget COVID, right? Let's skip these years. So February, January, February. What's the common pattern here, right? The slowest closing month for days on market is pretty much last month, right? Because one of those contracts written. Thanksgiving to Christmas to New Year to the beginning of the year, right? So that is a normal pattern. So next couple months, we're going to see if we flip the other way. Let's see if this is truly a peak. And if we look at that, if you look at February to March, look at that drop, and then May, April. So let's watch this next couple months and see what happens. And then the days on market, the average.
Anton,
7.
something humorous, go back to that. Look at the change 550%. To talk about, you could take something and throw it out of context.
Correct.
Yeah, I mean, it's just funny. It's just a.
And that's
moment.
why,
Yeah.
if you look at the COVID years, it looks bad, right?
Yeah.
But if you go back in time, this is normal. This is not abnormal. You want to see
550% is what the media does.
this is abnormal, right? So February of 2012, it was 90 days was the median, right? All these years were hitting 90 days in the winter. We're at 26, right? So we're going to return back to this window of time and get back to a normal market. Months of supply. So interestingly enough, our months of supply is dropping again, right? We hit 2.1 months in October, November, and we've been down since. And we're at, we're back down to, way under what our normal is. And again, I want to put perspective, anybody who says there's this real estate bubble, we're at 1.5 months of inventory. Let's go back in time and look, right? 1.8 months of inventory, 1.5 months of inventory. If we go back, 17 months of inventory. So I just want to put a perspective is we are 10 times faster in absorption than we were in the recession. 10 times. Right? So I know not everybody on this call was in the business back here, but we are 10 times faster. So we are not in this real estate bubble. Even with 7% interest rates, we're not in this real estate bubble. So I just want to put perspective, and again, months of supply, look at where we're at in the normal market, we're sitting about 4 months, right? So these years were about 4 months. Eventually, we're going to go back to 4 months and we'll probably find a place there, but we are still in a very imbalanced market with more demand than we have, buyers. So more demand than we have sellers. So if we go back, let me go zoom in a little bit here. So again, what's this trend? And you can see, let me expand out a little bit. You can see a little bit of the seasonality here, right? So even months of supply has a little bit of a seasonality. And it's reverse, right? So in the winter, it's the low, and the summer, it's the high, right? So if the winter is the low, and the summer's the high, I don't know, we're trending the wrong direction, and you'll see when we go to the homes for sale why this is trending down again. I mean, we got down to 0.7 months last year. So remember which month was really high in closings? It was kind of that April, May, June time period. That's because there was nothing for sale compared to how many buyers were out there. Right. And we're double what we were, but we're still really low historically. Homes for sale. Let me zoom in a little bit again. So homes for sale, and again, I still don't understand these market monitor numbers here, because I have my wall calendars up and we hit a high of 3,200. We were not at 3,500. So I'm still confused, must be old listings. You put it in after the fact and it shows, but any moment in time, we're at 3,200. So we're back down to under 2,400. So the trend is dropping on inventory again. And again, for anybody who says we're in a bubble, perspective, we had 12,000 houses for sale 15, 16 years ago. So 12,000 houses for sale compared to 2,362. And again, the normal was 6,000. If you look at the time period, we're sitting about 6,000. And what's abnormal that's happening right now is if you look at the inventory, the homes for sale is usually a low in January or February. And then it goes up from there. Right. But what's weird is that we're trending down, and we did not turn the corner in January and start going up. So this is, if we zoom in again, let's zoom in a little bit. This is, I'm not convinced that we're still looking for that bottom to find some seasonal increase on inventory, but we're not finding it yet. And we'll show you kind of the dynamics of what's happening with sellers, but we're still on a downward trend, and I'm still watching it every day. I write that calendar, and it's still week over week, we're still down. So until that, go ahead.
I was going to say, I think with this declining of homes for sale, we might see the days on market start to decline too.
Yeah, I think these are gonna start to, this days on market median, right? I think we're gonna start to kind of see this turn the other direction again. So homes for sale. So look at the closed sales. So closed sales were off 25.5% year over year. So we closed 1113 this year. Last February, we closed 1493. And you can see the big bump from February to March. I think we're feeling that right now, is that if you look at the contracts being written, we're going to have a bump up, but we're still starting from a lower point. I mean, we only closed 940 in January. So we're starting from a lower point. So we're going to go up, but we're still going to be negative year over year.
Right.
New listings. So on the new listing front, look at that, off 21.2%. So we listed 1,448 homes in February. And last February, we listed 1,838, so almost 400 less. So that's what's dropping this months of supply in homes, homes for sale, is the buyer demand is outweighing the motivated. This is just showing you're not having motivated sellers. And one thing John and I were talking about yesterday is look at the typical trend. If you go January to February, almost any year, it's higher. February is higher than January.
Yeah.
Right. So it's an upward trend, and you can go back in history and almost every year. This is very opposite of seasonality for us. To go down on listing count in February compared to January is opposite of seasonality.
Is
So
it the first time it's happened?
I think I saw one year, it was like 2013. I think it was 2013. So January to February.
Oh,
was
yeah.
lower.
Okay.
But
Okay.
it's not normal. It's
No,
always
no.
a rise. So this tick down is not normal for the Charleston market. So this is something to keep an eye on. And the new listings, we just don't have very motivated sellers. Right? As rates go higher, you demotivate sellers to move to a different house.
Yeah, they dig in.
They dig in even deeper than they already have.
Yeah.
If rates are 7% and they're at 3.5%, you're asking them to double their interest payment for the same priced, for the same mortgage. And probably, change their property taxes and everything else, that their expenses are going way up. And if they're trying to upsize their home on price, it's even more dramatic. So, I get it. You can move your equity, but you can't move your interest rate. So this, to me, this here is more of a reflection of having not very motivated sellers for defining, and it has to be a very defining reason to move. And so this is going to be a battle of finding the motivated sellers. And again, you can't have a transaction without a seller. Right. So we can have 1 million buyers for Charleston, but if we don't have 1 million sellers, we can't sell 1 million houses. So that's our challenge as agents right now, is a transaction count. Here's pending sales. So pending sales, yeah, we're year over year negative, going higher based off the seasonality.
But
right?
not as negative as I would expect if I would listen to the news media.
Correct. I mean, 13% year over year. And again, keep in mind,
Coming off of a brutal winter.
record years, right? These were record years all time, way above anything else. So as we start to get that 12, because all the media likes to talk about year over year numbers. So once we get past this spring of the craziest moment in real estate of spring of 2022, once we get past that, the year over year comparisons will start to get easier. And you're going to see these negative numbers start to go towards zero and then flip to be positive. We just have to get through a period of time and get to the second half of next year to start to see some of that happen. But pending sales are higher, still lower than where they were. But, for perspective, we were at 1,539 pre-COVID, right? So what's that, 4 years ago, we're at 1,539. What are we today? 1,539. Right? So we're exactly the same number of pending at the exact same moment as 4 years ago. So, it's not, and again, I want to go back. Let's look at our fun years. So February of 2009, we had 588 pending. That was
Not much better the following either.
That was painful. So just for perspective, we have almost triple what we had pending, and we have the same number as what we had pending in 2019. So those of us who were in the business in 2019, right, it's the same pace that we're at right now, with a lot less homes for sale, right? So just for perspective, we have less homes for sale, and we have the same number of pending. So let's look at homes for sale, February of 2019. So we had 6,100 homes for sale and the same number of pending, right? So we have 2362.
33%.
Yep. So
25%.
we have about 39% of the current of 2019 with the same number of pending. So is that more of a seller's market or a buyer's market? It's more of a seller's market, right? You have better absorption, and that's reflected in where we're at with months of supply. 1.5 months versus 4.1. Right? So we are a faster market with better absorption than we were the same. If we get rid of seasonality and we look at February of 2019, we have less homes for sale, same number pending, right? So that's an indication of where the market's at too. Dollar volume, we're off almost 24, 24% off, up from January, but not matching these last couple of years. But again, let's go back to March of 2019. We were 430 million, right? So we're up from 4 years ago. We're just not. It's hard. These comparisons are so hard to do in these years. So that's why everything is on the media front is a negative when you look at year over year. So shows depending. So I mean, the median in February was 12, and again, this is anything that's in showing time, and the average was 16. So again, it goes back to that conversation with sellers is that if you the median shows depending is 12. So if you hit 12 showings, half the homes will have had a contract and half take more than 12. But Joe and I were talking earlier, it's just everything is so pocketed right now on action and activity. You can have some that get multiple offers right away, and you can get some that get showings and no offers, and you can get some that aren't getting showings. And it is so individually based on what's happening right now. If you have new construction competition in a neighborhood, you're trying to sell a house, that can affect you. So you have to be able to look at these numbers as a whole, because remember, this is everything in MLS, right? Every area, every house, it's everything. So you have to be able to digest this and apply it. And again, maybe you need to break it down closer to what your house is. But remember, this has the most set, this is the highest data that you can have. It's everything. So it gives you the bigger picture, and the bigger picture still applies. So average is 16, but median is 12 shows per listing. So in a month, 7 showings. So not quite 2 a week, and not what we were February of last year, right? So we were 11 showings per listing last year. We're at 7.2, so it's off 35%. Why was this so low, so high? It's because we had nothing for sale. Right? When you have 900 homes for sale, you could have 20 people in that house, right? The first day. So this is a reflection on our higher inventory. And you can still tell there's a lot of buyers out there, just, they're becoming more selective, because of affordability. If you look
again, looking at pre-pandemic, it's not, pre-pandemic, that number wasn't that high.
So if we go for a reference point, let's go back here, we're at 4.8.
Yeah.
So we're having more showings per listing than we did back in February, and we had 6,000 homes for sale back here, right? So we have, for relative perspective, we have less for sale, so we have more showings per listing. Shows to pending, we were about the same, we were 10, 11, 12. This number, and I don't know how far back showing time goes. Ignore this back here, because I think that's the beginning of showing time. But you can see this number almost never varies much, right? From, again, ignore this first part where they get it going. 10 to 12 is the number of showings median to get a contract. And it doesn't matter if you're yay, we went up to 13, that's the high, but it's in this range. So if you get a dozen showings, that's your limit on to be the median, and it doesn't matter what year it is. So I always think this is kind of interesting. This doesn't really vary much. You're right in that range there. And then showings per listing, we went crazy back here just because there was nothing for sale. But look at how, if you go 7.2 in a month, it's higher than anything historic pre-COVID. Right? And you can see the seasonality here too. Look at December's the low, January jumps, February jumps, March goes high. So This is very front-loaded showings. You'll get your most action at the beginning of the year, and then it will start to drift off. It starts to drift off because you start to put more homes on the market by the time you hit March, April, May, June.
Right.
Right. And you flip by the time you hit June, July, August, you have less buyers looking. So you can tell the seasonality on showings per listing is very front-loaded and then a drift off, front-loaded, drift off. This is all wacky COVID stuff, but we're front-loaded and then we're going to hit a high and we're probably going to drift off. So it's important if you have sellers, to convince them to get on the market while the buyers are out there. Because it is a very front-loaded showing contract writing period. Let me zoom in a little bit here. So, and again, if we have new listings, I meant to show this. So the new listings, when you go back, let's go back to 19, right? We've been kind of using that as a sample. So December of 18, nobody wanted to sell their house. There were only 1,100 people that listed. But then look at that jump to January, almost double, right? And then February 21, 27, then March, April, May, pretty consistently high. If you go back to 2018, January, February, March. If you go to 2020, well, we're starting to get in COVID, so let's go back a little bit. So here's 2017, December, January, February, March. Here we are, December, January, February, March. What's the typical high month? It's usually March, right? The normal seasonality in Charleston, we list more homes in March than any other month. What month is it?
March.
It's March, right? So we should be listing more homes on a seasonal basis. We should be listing more homes this month than any other month of the year. Where are the sellers?
Hibernating.
They're hibernating. They're still hibernating. It's like my girl's bearded dragon is still in brumation period and it's not coming out yet. So you have to turn over the rocks and find these sellers and find what their motivation is. And a lot of these sellers, their motivation is finding another home. Well, when there's not much for sale, that becomes a challenge, right?
Mm-hmm.
So our challenge as agents is to go find these sellers because, I mean, look at 2018, we listed 2,561 homes in March. In 19, 2,534. And this was when COVID was shutting everything down. So I'm not going to take that 2,500 here, 2,300 here. So, I mean, we consistently hit a high water mark of 2,500. Are we going to do that this year?
I don't know.
I don't see how that's possible. I mean, we might be lucky to hit 2,200, right? So I think this high, and you can see houses hitting the market right now, right? You can see the listings coming on, but they're getting absorbed very quickly because our days in the market is going down. So
much of it will be a function of the interest rates, right?
Correct.
How long we stay at 7-ish?
But see, here's the weird challenge, because I mean, again, I've been in this since 2001. The weird challenge is I've never been in an interest rate environment that's been increasing this much. So here's the challenge is that if you look at where most people have their mortgage to where we are today, obviously it's a lot lower. Well, the higher the rates go, the less motivated sellers become, the less motivated buyers become, right? If let's say rates go back down to 5.5 to 6, well, then you might get some sellers who are like, okay, well, yeah, I'm at 3.5. I'm willing to leave because this house is 5.5% and it's really what I want. But at the same time, your demand is going to go up exponential because the buyers who weren't willing to buy at 7% now are all over at 5.5. So it doesn't really solve our problem of, reaching a balanced market. Because the lower the rates go, yeah, you might create some more listings, but I think you're creating more buyers. Yeah. The higher the rates go, you're losing buyers, but you're also losing sellers.
It's like it's an on or off thing.
Yeah, you're in this weird, because I mean, look at the demand. I mean, agents on this call, I mean, how many of you are involved in multiple offers and have been this year? I mean, Yeah, I mean, I've had multiple
This
offers.
week I've been in 3.
Yeah, I've got 2 today that I'm dealing with. So we obviously have demand and we're just missing the supply. If we were, again, normal inventory, if we could be in here at 6,000, then you could probably be, okay, well, I've got these houses to look at. I'm going to be the one that makes the offer. I can negotiate. I can, have a normal transaction period. But when you're this low and we're still in this very low range, you just have more demand than there is supply out there. And we're not fixing this problem. So this spring and summer, I'm not saying it's going to be this spring and summer of 2022, but you can feel that momentum of the buyers. And even at 7% interest rate, it's shocking how much activity there is. And again, you obviously have some people that have gotten priced out of areas or out of buying a house because of rates, but there's still a lot of people moving in from out of town. And I know, we have a small sample size, but John and I were also talking is like, there's also a lot of people moving out of Charleston too.
That's all my upcoming listings. That's the only listings I have are people moving out of the area.
Why are they leaving, John?
So many different reasons. 1, kids are out of school, time to get to the mountains. 2, age. What's the other listing that they're moving out of town? Family.
Yeah. So
Be close to the
here's
family.
your new listings, these people here,
Yeah.
it's so low because these are probably a lot of people that are moving out of the area for job, for family, for life, right? For life reasons, not just because they want a different house.
Right.
Right. And where they're moving to, they don't necessarily, they don't have there's a big difference between being local and having a house at a low interest rate, but really wanting to get somewhere else. And you think about it, Charleston's not the cheapest place in the US, right?
No.
So some of these people, like I'm meeting one next week that's moving to Traverse City, Michigan. I guarantee you they can get much more house in Traverse City, Michigan than they can in Charleston, South Carolina. Right? So
Agreed.
they might be able to take their equity and pay cash for a place up there so they could care less about the interest rates, right? They're not leaving their rate because it doesn't matter to them because they have the cash to put into a house in a more affordable area of the country. So this low listing count, I think if you look at that 1448, and I don't have the statistics, but I bet you a lot of those people are moving out of the Charleston area. I mean, I know we have a net inflow here, but that still means you have a lot of people moving out of town. And for all different reasons, right? But we have to find the motivated sellers here. And that is our challenge right now, is finding those motivated sellers. Because by default, I think we all have more buyers than we do sellers right now. And that's reflected in your months of supply. You can't be at 1.5 months of inventory and have a balanced database of buyers and sellers. We're all imbalanced to buyers right now. There's
Area 42 in James Island, the close in Mount Pleasant and James Island, they're under a month now.
Yeah, I mean, if we zoom in, let's look at city. We go Mount Pleasant.
42 and 21.
So here's everything Mount Pleasant. We're at 1.1 months of inventory.
I think 42 though is below a month.
Yeah, so I mean, we're dealing with hyper low inventory. And it just shows the demand is so much stronger than the supply. And again, it's not all of a sudden going to change next month. So that's why, in my opinion, we're going to see some negative numbers on prices here coming up from the media, but we are going to, and if you look at Mount Pleasant, and again, the bigger sample size, because I mean, look at how it jumps all over the place. That's why when you talk about median price, it's hard to get too defined. It's easier if you look at an entire MLS. This is kind of the general trend, right? It's kind of a couple high months, some sideways action, and this little part from November in here, I feel like a lot of that is the seasonality effect. right? That's the normal seasonality that we would feel. So I feel like this was the crazy market, some sideways action, normal seasonality decline. And it's going to be very interesting to watch the next 2 or 3 months, because I feel like we're going to find the bottom and start to kind of maneuver higher, not at this pace, not 18% in 5 months. That was crazy, right? We're going to start to see our normal 4 to 5%. And if you look at the NAR projections, you know, they feel like by next year, we're going to be heading higher on price slowly, right? But we're gonna, you know, we're kind of washing out. And Charleston, I feel like compared to nationwide, I mean, if you look at some of these cities like Austin and Boise and San Francisco, they're feeling more of the pain because their homes for sale are going way up, right? Their inventory trend looks different than ours. So again, you can pick out different markets that are behaving differently. Charleston is very, I think, buffered from some of those markets that got extremely overheated. Like Austin, Texas is one of those places that was probably way overheated last spring. And you probably have some people, you could have some people that are upside down on their houses there. You know, if the market drops there 15 to 20%, you could have some people who put 10% down that are upside down. But they're probably qualified people that are still going to continue to make their payments. You know, we didn't have, you know, we didn't have risky lending
I need
involved.
to eat something after this. I'm like,
So this is everything to watch, is that the next 2 to 3 months is going to be very interesting to see. Do we find bottoms on some of these? Do we kind of start to recover on price? Because remember, March closings, probably a good number of those are contracts written in January, maybe the beginning of February, right? Where the market seemed to be, you know, picking up on momentum. And by the time you hit April and May, you're going to see, you know, more closings. And I feel like the price is going to, you know, stabilize and start to go higher. Again, we're not going to hit 425 in May.
So what are you betting for price, the end of March, median price?
So last March was 385. I mean, I don't think we're going to go below that. I think we could just be sideways.
Okay.
I would say sideways is slightly higher. I'd be surprised if we were lower.
Especially because of what you just said, that last half of January, first half of February.
And I think if you hit April, May, June, July, compared to 385, we will be higher, but compared to last year, we will be lower.
Yeah.
So that's why I think there's this time lag with the media reporting negative numbers. It's like, yeah, we already know it's going to be negative, but the key thing is from this point forward, which direction are we going, right? And I feel like we're going to find the bottom and we're going to go higher. But by the time that June hits, that's year-old information, in my opinion. When they say we're negative, it's like, well, that's a year old. We know that. Like, which direction do we go from here? So, and I think that's an important conversation with buyers, is that, you know, they're going to read these articles or hear things about, oh, well, look, real estate's down 8%. Why would I buy a house? It's like, well, you buy a house because you're not buying it in here, you're buying it in here. Right. So
and we're still far above 322 on value.
Correct.
On sale price, right?
Yeah. So
the trend is up.
So we're going to return to normal seasonality, but I'm sorry, with 1.5 months of inventory, you're not in any sort of bubble. It's just, you know, again, we're 10 times faster than the recession. So, you know, all of these things, and you don't have to share all of this with everybody, like it's too much information, but take the pieces of information that are relevant to your clients and apply it to their situation, their house that they're either selling or buying. And it's, yeah, I mean, rates are not great right now compared to where they were, but there's still people buying, right? So you can't, you know, and rents are high. So, you know, you look at some people, and even with the higher interest rate, it's still cheaper for them to buy than it is to rent. So anybody have any additional input for the day?
It's the Wild West again.
Yeah, I mean, here we go. It's like I'm just feeling like we're in multiple offer land on
You
many
guys would,
deals.
you guys would know if this is normal, but it's the first time it happened to me. I had an agent reach out for a client that bought a few years ago in Carolina Park. She said they just lost out on multiple for Eastham. Dude, you know, as opposed to us door knocking, is there a
Yep.
good number of agents that reach out to the prior agents?
I
Don's
had
got one right now.
When you said that, reach out to me about my Dunes West listing I had last year. If he can get his
Okay,
cash
but what
buyers
about
into it.
trying to get one of your clients to sell? That was the buy side back then. Have you had, is that typical for agents to do? It's the first I've seen it. That's what I'm asking.
Did they reach out to you or they reach out to a
Yes,
client?
the agent reached out to me.
Yeah, I mean, that's probably because I mean,
I thought that was
they're
very
digging.
respectful. I don't think it's typical, is it?
I don't think anything like that is normal compared to like seasonal pass. The last few years, sure, I'd say it's probably normal. I'd probably reach out to
Yeah,
people who close
it
on
was-
things.
It was just impressive because the alternative is she would go door knock, right?
Yeah,
Yeah.
but you know, and again, this is where we're at as agents is for buyers. We're trying to find sellers for ourselves, but we're trying to find sellers for our
For them
buyers,
to move to, yeah.
right? It's like my challenge isn't having a list of buyers, it's having a list of houses to sell to them.
Right.
And that's definitely a reflection on the homes for sale. I mean, I'm personally surprised that we just went right through the first of the year and we just kept going down, and it shows even at 7% interest rates, the demand is still overwhelming the supply. And part of the 7% interest rate is just it's demotivating even more sellers. Like, you know, if rates were 5.5%, you'd have a lot of sellers willing to give up their rate. But once you hit
Right.
6.5, 7%, they're just not willing to move.
Yep.
Um,
Luckily, I have some cash buyers.
exactly.
I mean, there's still nothing for them.
You're still in multiple offers.
Yeah, I mean, or I can't even get an agent to even respond to an offer, right?
You guys,
Yeah.
what are your price points for your multiple offers? Do you mind sharing?
The one I'm in today is in the upper 500s. The one that I was in the other day was a pushover home for 3.25. So those were the
Okay.
two that we were in multiples, and I wasn't in multiples with two of them. So
Yeah, I mean, I
Okay.
had a couple in the 8s, one in the 4s, one that I couldn't even get in the door. They just decided to take an offer and wouldn't even let us in. That was in the 700 range. So
Okay, so all in this below $1 million. Yeah, and the one that she had called about, that was multiple and it went to pending and it was 929.
yeah,
So it's solidly happening, right? It's
oh yeah,
numerous price points.
yeah.
Thank you.
So, all right, well, everybody, good luck this weekend out there, and we'll watch these numbers and do it again in a month. So
Thanks very much.
take
Thanks,
care.
Anton.
You're welcome.
yeah, man. Talk to you soon.
Bye.